A very good morning to everyone and welcome to KIP Real Estate Investment Trust Q4 and full year FY 2022 results briefing. I'm Sandra from Image Jewel Communications, the IR and PR consultant for KIP REIT, and I shall be your presenter and moderator for today's briefing. Today's results briefing is part of Bursa Malaysia's Investor Relations and Public Relations project for selected listed companies. The IR and PR project is aimed to improve the visibility and accessibility of participating PLCs via more active IR engagements with the investment community. For the first phase of the project, Image Jewel Communications has been appointed as a third-party IR company to train and educate participating PLCs to conduct effective IR engagements. The selected companies for this program are PLCs that are less accessible to analysts and investors, but highly in demand based on the feedback received from the investment community. We wish to thank KIP REIT for participating in this project. The recording of the investor briefing and presentation slides will be made available for all on Bursa Malaysia Institutional Insights portal after the event. With us today, we have Mr. Alex Chew, the Executive Director of KIP REIT, Ms. He Wei Bing, the CFO, and Ms. Natalie Ong from the Legal and IR Department. On behalf of KIP REIT, please allow me to go through the results presentation deck, starting from the financial key highlights for the fourth quarter as well as the full financial year of FY 2022. In the quarter under review, gross revenue was achieved at 19.2 million. Net property income and realized profit after tax was 14.2 million and 9.5 million respectively, while distributable income was reported at 9.7 million, with the proposed final income distribution for the quarter of 10.61 million, which translated to 2.1 cents per unit. For the full financial year ended 30th June 2022, revenue was registered at 73.7 million, marginally down by 0.7%. Nevertheless, NPI increased by 0.2% to 56.8 million, while realized PAT was at 36 million. Total income available for distribution for FY 2022 was 37.3 million, which was 2.4% lower than last year due to additional rental assistance offered by KIP, which amounted to 0.5 million during the first quarter of the financial year. Total distribution declared stood at 6.8 cents, translating to an annualized distribution yield of 7.51% based on the closing share price of 91 cents as of yesterday. Average occupancy rate for the year was slightly lower by 1.1 percentage point to 87.3%. In detail, gross revenue slipped marginally by 0.9% from 19.4 million a year ago to 19.2 million. The decrease was mainly attributed to the lower revenue recorded in KIP Mall Bangi as a result of a vacated lot of an anchor tenant since end February this year, of which a new anchor tenant is expected to come in by this month. Nevertheless, the revenue was cushioned by lower rental rebate amortization and higher promotional area income generated in this quarter. For full year, total gross revenue stood at 73.7 million, which was 0.7% lower than last year's 74.2 million. This was due to the lower promotional area income during the first 2 quarters of the financial year and the lower average occupancy rate from KIP Mall Bangi and Tampung. Net property income for this quarter declined in tandem with a lower gross revenue during the quarter under review, as well as higher utilities expenses incurred as the malls were fully operated, coupled with the absence of the 10% discount from TNB, which was previously provided to the mall. Nevertheless, for the full year, NPI was marginally higher than a year ago from 56.7 million to 56.8 million, driven by the higher revenue from Aeon Mall Kinta City. Profit after tax was up by over 100% from 35.2 million to 75.5 million for FY 2022. This was caused by the changes in the fair value on KIP 7 assets amounted to 39.5 million, which was recorded as the unrealized PAT portion. Realized PAT for the year, on the other hand, was marginally down due to the lower revenue and higher expenses incurred during the year. Distributable income for this quarter stood at 9.7 million, bringing the total to 37.3 million for FY 2022. The manager has proposed a final distribution per unit of 2.1 cent for the fourth quarter FY 2022. Together with the last 3 quarters, the total distribution for the last trailing 12 months period works out to be 6.8 cent per unit. In comparison to EPF, a 5-year FD rate and a 10-year MGS, KIP REIT gives a higher annual yield of 7.51% to its unit holders, given yesterday's closing share price of 91 cents. Its dividend yield was also higher as compared to the peers' average annual yield of 5.08%. The group's financial position remains healthy with the total assets of 889 million, which includes the value of its investment properties at 852 million and cash equivalents of 31 million. Total liabilities stood at 334.6 million with total borrowings of 312.9 million, giving a gearing ratio of 35.2%. Net asset value per unit was $1.10 on the back of the net asset value after income distribution of 554.5 million. Maintaining its ongoing capital risk management, 68% of KIP's borrowings are based on fixed rate and the balance 32% is based on floating rate. This generally gives KIP REIT a natural hedge against the movement in interest rates, in addition to giving a 68% certainty in its borrowing costs. The next refinancing of both the rated and unrated MTN loan totaling to 310 million are due on 31st July 2024. As we are all aware, KIP currently has a total of 7 assets, which includes the Aeon Mall Kinta City, which are located strategically at the northern, southern, and the central regions. These assets are currently valued at 852 million, with total lettable area of 1.48 million square feet. As of 30th June 2022, there are 780 tenants, which gives an average occupancy rate of 86.8%. The average occupancy rate for each KIP malls are shown in this slide here. In comparison to the last quarter, all the malls have recorded a higher occupancy rate with the exception of KIP Mall Bangi, which was explained earlier that the mall was currently in preparation of onboarding a new anchor tenant as the lot was vacated in February this year. It is also worth noting that KIP Mall Tampoi has recorded a much higher occupancy rate during this quarter since a new major tenant has occupied 13.4% of its total net lettable area. The number of leases expiring in FY 2023 is 590 with a lease area size of 442,746 square feet. The area that is expiring is equivalent to 34.3% of its occupied NLA or 50.1% of its gross rental income. The weighted average lease expiry as at 30th June 2022 stood at 2.51 years based on occupied NLA and 2.06 years calculated based on gross rental income. Here, on behalf of KIP REIT, I would also like to briefly go through the proposed acquisitions that was announced by the group earlier this month. The proposed acquisitions are in relation to the proposed acquisition of 3 industrial properties located at the Pulau Indah Industrial Park for an aggregate purchase price of 78.7 million. The vendors for these properties are the Hexstar Group of companies, namely Hexstar Chemical Sdn Bhd, Hexstar Industrial Chemical Sdn Bhd, and Teju Logistics Sdn Berhad. All of these properties are leasehold with an expiring term until 24 February 2097. This gives an unexpired term of approximately another 74 years. These properties are all fully tenanted with a net rental yield of 6.5%. The proposed acquisition is expected to be completed by the second quarter of the calendar year 2023. Upon completion, KIP will execute a lease agreement with the lessees for a lease period of 15 years that will then provide KIP REIT with a recurring sustainable income. The rationales behind the acquisitions are the strategic location of the properties, which are located in Pulau Indah Industrial Park with accessible major highways. The strong demand for industrial properties in this area would suggest that the properties would continue to attract demand. Secondly, the proposed acquisitions will also enhance and strengthen the group's portfolio diversification through the exposure to industrial properties and therefore reduce the reliance on any single sector. Thirdly, the proposed leases will provide KIP REIT with a stable and sustainable income stream for a committed triple net lease period of 15 years. Fourthly, the lessees are the Hexar Group of companies, which are related to the major unit holder of KIP REIT. The Hexar Group has a strong balance sheet and financial standing that demonstrates strong credit standing, which will minimize the probability of default in rental payments. Finally, the proposed leases are structured with embedded organic growth with rental escalation of 13% at the 4th, 7th, and 11th anniversaries of the lease term. Moving on to the outlook, the Retail Group Malaysia has projected an average growth rate of the retail industry of 25.7% for the second quarter this year, followed by 3.4% and 3.6% for the third and fourth quarter respectively. This brings the estimate growth for FY 2022 at 13.1%. The Malaysia Retail Association also anticipated the retail industry to make a full recovery by end 2022. Since the easing of COVID-19 restrictions last year, footfall across shopping malls has picked up with visible traffic congestion. Prices of basic necessities, consumer goods, oil price, and cost of living are expected to rise during the first half of 2022, which will affect the purchasing power of Malaysian households. Interest rate hike will likely have a negative impact on the purchasing power of consumers. Similarly, according to the World Bank and the International Monetary Fund, GDP growth is expected to grow at 5.5% and 5.75% respectively. Bank Negara Malaysia has also projected growth to be 5.3% to 6.3%, supported by strong domestic demand, continued expansion in external demand, and further improvement in the labour market. Going forward, the group will continue to focus on its diversification on its portfolio to invest in income-producing real estate assets, which includes industrial facilities, logistics, and warehouse facilities. The private placement exercise, which was announced back in August last year to raise approximately 80.8 million, is allocated for future yield accretive assets to create long-term value to unit holders. The issue price for the first tranche of the placement unit is fixed at 80 cents per placement unit. Operationally, KIP REIT will remain vigilant and prudent on managing their cash flow and exercising financial discipline to continue delivering value to the unit holders. Essential services under KIP REIT assets has shown relatively stronger resilience, and the group will continue to cater for its surrounding communities, offering daily necessities and essential services. The group will also implement and adopt appropriate strategies accordingly to further encourage long-term partnerships with tenants and ultimately ensure the long-term sustainability of KIP REIT. As part of the deck, we have also incorporated more detailed information for each of the 7 respective asset portfolios, being KIP Mall Tampoi, Kota Tinggi, Masai, Senawang, Melaka, Bangi, and Aeon Mall Kinta City. And with this brings the end of my presentation. We now open the floor for Q&A session. You can either ask your questions verbally or have your questions typed out in the chat box. Thank you. Maybe let me start with some few questions. What's the current progress for KIP Mall Bangi's facelift at the moment?
Thanks, Sarah. Sandra. Maybe I can answer this question.
Yep.
We have awarded the main contract to the contractor, which I think you can see in our quarterly announcement under the capital commitments. And main con has already started work. It will schedule to be completed by next year, September.
Okay, thank you. And may I know what's the current progress of the private placement and whether the tranche has been, any takers for the tranche has been identified?
The first tranche scheduled to be listed mid next week.
Yep. Mid next week. Huh?
Yes. We have 52.5 million units taken out.
Okay. Okay, thanks, Wei Bing.
Welcome.
Hello, this is Umar Afin. That's 52 million units that have been taken out, represent how much in terms of percentage wise?
It's about 50+%, because it's total is 101, so it's 52.5 over 101 is about 52.
Oh, so around 15 million lah.
In terms of the dollar value.
Yeah.
In terms of the dollar value, it will be 42, because it's 52.5 times 80.5 cents.
Okay. Just now you said, I just want to clarify on the KIP Mall Bangi facelift, start to work in this September.
Next year, September. It will be completed.
Oh,
next year, September. Yes.
So we're gonna expect actually the fair value of the property is gonna increase lah. Because I saw your revaluation of properties is actually going down a bit this year because of KIP Mall Bangi.
Correct. Yeah. So the reason for the drop is because the valuers actually taking into considerations the occupancy rate as at the valuation date, which is 30th June.
Previously you guided that the facelift is going to cost around 18 million.
Sorry, Umar, can you repeat?
Oh, sorry. Previously you guided that the facelift is going to cost around 18 million.
The facelift?
The KIP Mall Bangi asset enhancement initiative. How much is it going to cost?
The total of the facelift, is it?
Yeah.
We have a budget of 22. So we have spent, so certain portion is for the professional consultancy fees. And we have spent about $1 million plus for the anchor tenant lot to welcome our anchor tenants. And the one that we awarded to the main con is 18.1 million.
The new anchor tenants is Hero Market, right?
Hero and Noco, correct.
Hero
is taken the ground. Yeah, they have already commenced their business 15th of July.
How much rental revision that you negotiate with them?
It's 10%
compared to Giant.
Hello. Yeah.
Hello.
Ya, Dato'.
Ya, Dato'.
In terms of the like for like, I mean the whatever that we take from the Giant and the Hero, there is close to 10% plus increase.
Okay. All right. Thank you. In terms of your renewal next year, if I'm not mistaken, the slide you showed just now represent 50% of gross rental income, right? So from this amount, or for this amount, how much is it actually attributable to micro tenants?
I would say maybe 90% of that 50%.
90. Oh, okay.
Yes. The big one is from Masai, which is due in March 2023.
So far for this year, do you observe positive rental revision or flattish for your micro tenants?
Flattish.
Flattish. For your anchor, it's actually doesn't have a problem lah, because part of the step up.
Correct.
What's the quantum? Single digit?
For the micro or the anchor tenant?
Anchor, because you said
anchor is double digit.
Anchor double digit.
Anchor, yes.
How much is that?
So it range from 10 to 15.
That's actually good. Do you foresee, okay, for example, do you for your feedback for your micro tenants, because things are started to look bad for the economy, there's a recessionary worries and everything. Do you think that they will be able to maintain the same level of rental rate, or perhaps a slightly negative for next year?
I think from the feedback and our own observation, we should be able to have at least flat. Because despite the inflationary pressure, but our mall basically offer the essential or necessities goods.
You said the big chunk of the next year renewal is from micro tenants. How many percent is it from Masai?
In terms of the, maybe out of the 50%, Masai percentage is about 60% out of the 50, the total.
Okay. Actually been to Masai one 2 months ago. Things are looking quite good for Masai. The footfall obviously has returned, but I'm not so sure lah compared to pre-pandemic. Things are looking busy there. I may have missed this. Your acquisition is expected to complete by when?
The acquisition?
Yeah.
The second quarter of the calendar year 2023, if let's say everything goes smoothly.
Okay. Why? This is an open-ended question. Why want to proceed with the acquisition when the expected EPU is going to be slightly diluted from this, because the gross yield is actually lower than your average existing assets.
But this is the different industry. Our existing yield mainly from the retail, and I think in the past we also mentioned that we want to diversify into industrial properties, and we see this as our opportunities.
Is there any more acquisition in the pipeline?
Not at the
Other
moment.
than not at the moment, not in the new moment.
Yeah.
Okay. All right, that's all for me. I jump back to the. Thank you.
Okay, thank you, Uma. Thank you, Wei Bin. We have another question from Jennifer from TA. What is the target date for placement of tranche 2 of the balance 2.5 million shares? What is the target placement price?
I can take on the question. We expected to be next month. So sometime between next month, the next tranche will be offering out to the public.
Okay, thank you, Dato'.
Thank you.
Wei Bin, maybe can I ask, do you see any visible impact on the footfall given the recent inflationary issues that's going on, recently?
Thank you, Sandra. But I think Uma just now has touched on quite a similar question. So we do not foresee that there will be a major impact on the footfall, taking into consideration that our mall are offering the essential services and necessity.
Okay, thank you.
Just to clarify, 100% of revenue for KIP REIT is actually from rental revenue, right? There's no revenue sharing agreement with your anchor tenants or things like that, right?
Sorry, Uma, your question is whether 100% of the rental income is from?
So basically, there's no like variable sharing in terms of sales with your anchor tenants, like all your
There is.
revenues actually.
There is.
Yeah.
There is.
Yeah,
We have very minimal. It's about 0.7% of the total revenue.
Okay.
Yeah.
This is coming from which assets?
We have most of our assets. So we have those tenants, like for example, Watson or KFC, actually as on the variables rental. But the total percentage is relatively low. It's less than 1%.
Mm-hmm. More on your KIP REIT Bangi. So this major facelift that you're gonna undergo, it's gonna be done in phases. Do you think it's gonna impact footfall? Because so far, if I'm not mistaken, the KIP Mall Bangi, the hero market is new and shiny. But then the rest, if you actually undergoes a major facelift there, what happens is that it's gonna block some of the traffic. There's gonna be a construction noise and everything. So how's it gonna impact your performance?
For the KIP Mall Bangi, we foresee that for the next another 14 to 15 months, until the full completion of the facelift, there will be some disruptions to the occupancy rate because we may need to relocate some of the current tenants to another place or temporarily stop operations for a few weeks to a month plus, depending on the construction schedule.
Can you give guidance to the percentage of?
I would say that it will. I mean, for the full next 12 months, it will be at the average of 70 plus.
Occupancy rate.
Occupancy rate for Bangi.
Specifically for the facelift, is this gonna be done on the ground level, second level, third level, or the parking spots? Can you give a bit of color there?
The facelift actually involved the whole mall. And currently, we actually started from the highest level, which is level 4, and it will slowly come down. But in between, moving forward, okay, as and when that if let's say operation and our contractor and consultants feel that there is requirements in changing a little bit of the milestone here and there, then I think they will make the relevant adjustment.
Okay, all right. Thank you. Thank you.
Thank you, Umar.
Hi, good morning. This is Wendy from TA. Thanks for the call. Just would like to touch on your acquisition going forward. I understand that there's no immediate targets in the near term, but can you actually share with us what's the criteria of a viable acquisition target are? Are you guys looking at growth potential or purely from a yield perspective?
I can take on this question, Wei Bing. I think both requirement criteria is important to us. Obviously, we will look at the yield for the start, and valuation of the asset is as equally important. So the asset has to be a good asset if we look at it for our future, if there's any potential acquisition. And our aim is to provide regular and stable returns. So the yield is playing a big part of it.
I think just now Omar also touched on this. Given that KIP REIT, your current distribution yield exceeds 7%, right? Do you think it is a bit difficult to acquire an asset that is instantly accretive at the distribution level? So how do you mitigate that?
Maybe you take on the question. I'm about to go into share after now.
Yeah, sure, Dato'. Wendy, okay, I think for any acquisitions now, because of our yield percentage, it will have a dilution at the beginning. Okay, maybe I just used our current proposed acquisition. So for the first 3 years, there will be a dilution. But when it comes to the first terms reversion, then we can see that there will be everything being equal, then it will be a yield accretive already.
Thanks, Wei Bing.
One more for me, maybe. I just take this opportunity to ask you and maybe Dato' on your right of first refusal. I think for other KIP REIT assets, is there any future potential acquisition for this right of first refusal assets? Because they actually, I think they are more retail oriented, which is consistently your KIP REIT existing competency, right? Any comments on that?
Yeah, maybe I can take on this question as well. So I think we will wait until it's offered. We do have the offer, but we will continue to work towards the stable and regular transfers, especially the criteria, the parameter of investment of our KIP REIT. We have to achieve that first before we talk about acquiring the offer asset.
So are you saying that the right of first refusal assets is not yet stable in terms of occupancy?
I would not. I would say we are still nurturing it. It will be soon, but until it achieve our parameter of investment, then probably we will work on it. And actually, we are working towards it. Otherwise, we won't accept any asset even from our side. You know, there must be a certain criteria that to be met.
Oh,
To be
so
met.
Dato',
Yeah.
a bit more color on the timeline. I know it's not going to be anytime soon, but maybe like
Yeah,
2024.
Yeah, we hope towards maybe second quarter of third quarter of next year, or maybe next year, sometime next year towards next year.
Okay.
Yeah. That is the timeline we're working on it, but it's all still unsure yet. Till such time, we will keep you informed. Thank you.
Okay.
Thank you, Omar.
Thank you so much. Okay, that's all from me.
Thank you, Umar. We have another question from Jennifer. What is your target holding in terms of percentage of total assets in industrial assets in the medium term, say about between 3 to 5 years?
At the moment, we are looking at retail 70-30 towards the industrial, but I mean, it will reverse when things go the other way around. But at the moment, we are looking at 70-30 now because our core is still on the retail. So we are starting to go into the industrial asset. And also we have to base on the economic landscape of the situation now.
Thank you, Dato'.
It's always the demand and supply in the foreign market. Yeah. So at that, I mean, we wouldn't know in another 3 years, 5 years what is the situation, but we will definitely look to it.
And another question from Umar. Can you share any guidance on impact of rising borrowing costs?
Umar, maybe I can take this question. I think just now, Sandra also have bring us through on the mix of the MTN. So we have 100 million of the floating unrated MTN. So every 25% basic point increase, it will be 250,000 to the bottom line. And it is very marginal to the distributable income.
Thanks, Wei Bing.
Sorry, every 25 basis point increase impact bottom line by 250K.
Yes, correct.
Okay, all right. Thank you.
Okay, if there are no further questions, we will end the session for today. However, please feel free to reach out to us at Image Jewel Communications should you have any follow-up questions. On behalf,
Thank you.
on behalf of KIP REIT and Bursa Malaysia, thank you all for attending today's briefing. Bye.
Thank you.
Bye.
Thank you
Thank
very
you,
much.
everyone.
Thank you. We see you guys again. Yeah. Thank you.
Thank you.
Everyone.
Thank you. Bye.
Thank you.
Thank you.